Hi and welcome to this live currency strength indicator table video with me, John, on this Thursday the 19th of January. Here we have the tables in front of us. We have two types of tables. We have the trend traders table and the day traders table. These are showing the same studies but just highlighting different time frames. The currency is highlighted in green, show there's a confluence between the two trading time frames. That's why I'll be focusing some attention in these videos because those are offering us some potential trading opportunities. The tables auto update every 15 minutes 24/7, meaning our members can access real-time data any time of day or night and get the latest update. So, what are the tables showing us today? Well, it's still telling us that the yen remains the top currency on the trend trader side of things. Now, obviously, we had some Bank of Japan data recently, and the Bank of Japan did suddenly weaken off the back of that. However, it has returned back to the day traders chart as well as still remaining top on the trend trader. So that's still an interesting one to watch. We spoke about CAD yen in a previous video this week, and CAD yen has now broken the 95 lows. So make sure you check out that currency pair. Pound is S2 and is S3 on the day traders. We've got CAD as W2 on both tables and Kiwi as W3 on both tables. On the day traders side, we have the Swiss Franc as the strongest currency and the Australian dollar as the weakest currency. Now, with the day traders, I like to look at the top currency pair for potential opportunities, but I've also looked at other Swiss franc pairs. I mean, this is the currency we're going to focus on going into today's video, because if we look across the Swiss franc pairs, the Swiss franc strength is quite clear to see. And I'm going to start off with Kiwi Swiss, because Kiwi's featured are here on both tables, showing there's a confluence between that weakness and the top currency to trade it against from a day traders is the Swiss franc. So let's go jump into the Kiwi Swiss and let's have a look at what we're looking at here in the market. So why could we be tempted to continue to look for short opportunities here? Well, price has turned around a little bit. We actually came up towards the daily 200 moving average, and we've reversed price since then, and we've traded back below a key level of resistance, which was the 0 spot 59 handle. Now, the reason why the 0 spot 59 handle's in here is because price was consolidating between that level as well as the 0 spot 6075. Price has then traded down to the downside here, having to the 0 spot 55.50 handle, and then we've traded back through that range. So what you could have looked for potentially was price to remain within that range and potentially start another range again before maybe even looking for breaks to the upside here. However, obviously the situation's changed here now, and it looks to me like this could be a lower high forming for a potential move back to the downside here. Now, we did recently break out of this trend line here, which does suggest, buyers were interested in the market. However, if we look at it from a trend perspective, we don't really have consecutive higher highs here. The market instead has just kind of rallied up. I think if we were going to go for the long-term bullish move here, I would have liked to see price trade above these weekly highs at 0 spot 6075. Instead, we could be continuing the monthly trend. So if I just pop up to a monthly time frame, you can see in a little bit clearer that price is making those lower highs and lower lows. We had a bit of consolidation here, which is what we outlined previously, and then price has come back into that and started to reject again. So definitely something to watch. Now, what I've outlined is the monthly low here. So if I go down to the daily time frame, the monthly low is around about the 0 spot 58 handle. I think if we take that monthly low out, then I think this is really going to start telling us that price is going to potentially move to the downside. We have these lows here to contend with, and also obviously those previous swing lows down here at the 0 spot 55 handle as well. Now, from a short-term basis, does that mean that we can potentially trade to the 0 spot 58 handle? Absolutely. So what I want to look for on a 4-hour time frame is price to pull back. So if I just zoom back out a little bit here, you can see that we had some support around here at the 0 spot 59 handle. So what I'll be looking for from a trend trading perspective is if price can come back to the 0 spot 59 handle reject, start to see some bearish or some sellers starting to get active around this point, we could then look for opportunities down to the 0 spot 58 handle, where we could look to either take some position off, see if it can continue through, or look to see if price then reverses and moves back to the upside at that point. But the thing is, we've got multiple confluences telling us that we're going to the downside here. We've got the tables telling us that the Swiss franc is stronger than the New Zealand dollar. We're trading below the 200 daily moving average. We've broken through trend line support through here, okay, and we also changed sort of trend here by breaking through key lows there. So that to me is all kind of pointing towards the downside here, or some confluence pointing towards the downside. If we go to another chart of interest, then that still involves the Swiss franc. If we just jump up to this the tables again, you can see Aussie Swiss is the top currency pair to look at from a day trading perspective. Here we go. So Aussie Swiss also looking for potential downside as well, and if we just pop up to a monthly again and just zoom in a little bit, you can see that we are technically trading to the downside here. Most recently we've come back up into the 0 spot 64.80 highs, which were the highs in October of 2022, and we've rejected those highs, and it looks like we could potentially be coming back down to the 0 spot 61 handle. From a weekly point of view, you can see that we're kind of trading between the lows here, the 0 spot 62 and that 0 spot 64.50 area, or even the 0 spot 65, which we've outlined here in the past. So price could be moving to the downside. Again, price did trade outside of this bearish channel that we've had punched in here, but price hasn't technically broken into and completed new highs. What I'd want to see is 2 closes above in order to then look for those long opportunities. Again, we're still below the daily 200 moving average here, and now we're trading below the 0 spot 64. So very similar to Kiwi Swiss, I think it's okay to continue to look for downside here. And if I go to the 8-hour chart, we've got a really clear low being formed at that 0 spot 64 handle in there, and that to me is an area where if price was to pull back up, we could look for short trading opportunities in and around that area to the downside. Alternatively, because we're back to the 0 spot 63, which has been an important level in the past, if we get a consolidation and then a breakout, that's also something that could give us the opportunity to look for selling opportunities then with 0 spot 61.75 being the sort of early targets before looking for the 0 spot 61. If I just go back to the tables here, you know, we could also potentially look at CAD Swiss. Now, like I said before, we did talk about CAD Yen in a previous video this week, so we will just quickly jump onto that one as well, because they look fairly similar in what's happening to price action. Now, CAD Swiss has come into a key low here. You can see around about the 0 spot 67.75. So aggressive move into that level. If we were to trade below that, it opens a move down to the extreme lows, which is 0 spot 66.50. If I go to the weekly time frame, you can see those lows formed back in 2020. So if we were to trade through those lows, that would be quite a significant move. I think would potentially see price come back down to the extreme lows. If we kind of take a look at the monthly on CAD Swiss, we are in an overall range anyway. You know, we've been in that range for, you know, since 2014, so it's a significant range, and we could be coming back to the range lows essentially from this monthly time frame outlook. So definitely want to keep your eye on. I'm just going to flick over to CAD Yen, because CAD Yen has traded through the 95 lows. Now, we did kind of discuss what could happen on CAD Yen. Now, our outlook could have changed because of the Bank of Japan, and we kind of noted that, and we said that price may even pop up first before trading to the downside, which is exactly what happened in the end. We broke through the sort of bullish channel that we had outlined, price rejected and continued to the downside here, and now we're trading below the 95 handle. It could signal some further downside for this price due to the fact that we're expecting the 93 level to be tested. So keep your eye on CAD yen as well. Could be breaking to the downside there. I quite like New Zealand Swiss and Aussie Swiss for some downside at the moment as well. We've just had the New Zealand Prime Minister resign, so that could be a reason as well to why we're seeing this Kiwi weakness in play at the moment. So uncertainty there could drive Kiwi prices to the downside, and Kiwi Swiss could reach the 0.58 handle. So keep your eye on that one. I hope you enjoyed the video, and I look forward to speaking to you in the next one.